Hello, my name is Maria Zubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is the 12th of August 2024 and it is a weekly markets update. Let's have a look at the news of week 32 and see what are the next trends. Urea market is quiet, eagerly waiting for confirmation of the rumors that next Indian tender will be announced these days. Analysts evaluate current urea stocks in India at the level of 4.6 million tons, significantly down from June levels. Thus, the market expects India to book in the next tender at least 702 million tons. However, several times already during past tenders, India finally booked much less volume than everyone expected. So let's see how this tender goes. In the West, activity in urea market is mostly subdued. In Brazil, several weeks of very slow sales led to CFR levels deterioration, and last week at least 40,000 tons of granular non-sanctioned urea was purchased at $345 to $47 CFR. Brazil is expected to increase purchases later in August and September, which should drive sales of Middle East and Egyptian producers and support prices. In Central America, Incofe issued another tender for a total 29,000 tons to several ports on the west coast and 17,000 tons for the east coast. The tender will close today, so we will see the results later this week. In Europe, buyers are expected to come back to the market for some refill purchases in the next few weeks, but current purchase price ideas are lower than Northern African producers are targeting. Egyptian producers are still comfortable with their stocks and dropped price ideas just marginally to the level of $355 to $60 FOB, which didn't provoke any sales. Algerian producers are targeting also around $355 FOB and claim to sell a small lot to UK at this level for August shipment. In the Black Sea, SOCAR announced sales tender for total 20,000 tons from Poti and Trabzon that closed on Friday last week. But it seems to be the same volume that was put at tender by a producer earlier that didn't result in any sales due to high price target. In the East, there is also not much activity. Producers are mostly staying away from the market, waiting for the Indian tender. In Pakistan, a tender that was finalized last week still was not awarded to West Trade, which proposed the lowest price for the total volume. At the same time, news are circulating that Pakistan government is in discussions simultaneously with China and Turkmenistan for supply of 100,000 tons of urea, with government-to-government deal. For now, it is unclear how Pakistani purchases will go, if the tender is awarded to the winner or separate purchase process will continue. Middle East producers' price ideas stay at the level of 340 FOB, with not much pressure at the stock so far. The earliest tender of Iranian maize for 100,000 tons of granular for August-September shipment resulted in the sales at $290 FOB. Last week, Lord Degan also announced a sales tender for a total 50,000 tons of granular for August-September shipment, to be closed on August 11. We will see the results later this week. Paper values showed upward correction for most benchmarks for September. This is driven by positive expectations about tightening supply amid potential Indian tender. Egypt FOB values corrected downwards for August to the average $349 FOB and upwards for later this year to the average of $348 for September and $344 for October. NOLA FOB value climbed for August by $5 to the average $313 for short ton, by $10 for September to the average $320. Arab Gulf FOB values also corrected upwards due to the spread decrease to the level of $333 for August and September, and by $7 to the level of $330 for October. Brazil CFR also showed narrower spread, thus marginally corrected upwards to the average $353 for August, downwards by $5 to the average of $355 for September, and upwards by $9 to the average $351 for October. Ammonium sulfate market prices are stable to firm. In Brazil, the demand revived and thus prices moved higher. For compacted product, $275 to $80 CFR. It happened due to urea sentiment, as well as higher price ideas of Chinese producers. Chinese compacted and granular price increased by $5 to $162.65 FOB, while crystal product values remained unchanged. Activity in nitrates and UAN markets continues to be subdued. However, there were several purchase tenders announced last week for shipment later in the year. One from Tunisia for 70,000 tons to be supplied during August-October. The tender will close today. The other one from Nkofe to Central America as a part of larger tender with urea and ammonium nitrate. The buyer is seeking in total for 35,000 tons of nitrate to be supplied both to eastern and western coast during August-September. The tender also will be closed later today. Company news. Neohim in Bulgaria restarted ammonium nitrate production after 2 months of repair and maintenance. Neohim production capacity is 450,000 tons per year. The producer is a very important supplier in the region. Ammonia market continues to be divided between West and East, with completely different sentiments dominating each part of the world. Production curtailments in Egypt and Trinidad still pressure availability and prices in the West. As a result, Algeria sold a small spot cargo at much higher price versus previous, at $520 FOB. In the East, on the contrary, demand is quite soft and production is going as usual, so market sentiment is rather bearish. Price difference is increasing and finally might bring some Middle East volumes to the buyers in the West, despite that Red Sea is closed and the vessels will need to take the long route. Company news. OCI Global will sell 100% of its equity in its 1.1 million tons per year clean ammonia project under construction in Beaumont, Texas, to Australian Woodside Energy Group Ltd for a total of $2.35 billion. The production is expected to start in 2025. Phosphates market is mostly quiet. Europe is in holiday mode, so little interest. In India, the rumors say that OCP negotiations for quantities and prices agreed for DAP for shipments up to December. Exact quantities are not yet disclosed by Department of Fertilizers. More clarity will follow this week. But first rumors indicate DAP volume at 700,000 tons at price level of $580 FOB, which means around $620 CFR. TSP volume 300,000 tons at the price $400 FOB, which means around $440 CFR. There is still no announcement regarding special package subsidy for Indian DAP importers, and DAP stocks are low, so this deal, if it happens of course, comes just in time. The recent upheaval in Bangladesh put under threat country's ability to buy product. At a recent tender, high DAP prices were heard, and now it is unclear whether the country can afford to pay at all. Brazil was quiet, no news regarding fresh deals for MAP. The CFR price is evaluated at the same level of $635 CFR. In the US, most of the discussions in the market are about the uncertainty on demand this fall, with all buyers staying inactive for now. Phosphate prices are so high that farmers might consider either lowering application rates or deciding to skip fall application and wait for spring. After the harvest, purchase sentiment will most likely improve, but for now it looks quite gloomy. Moving to the fundamentals. European natural gas price remained at the high level of last week, around 40 euros per megawatt hour, amid further increasing of geopolitical tensions. Ukrainian forces took control over the Sudzha gas transit terminal, which is the key one in the infrastructure of gas supply to Europe. However, gas transit volume didn't drop, and will not most likely. Geopolitical situation will be the key factor for further price moves, which is very difficult to forecast now. At the background of this market sentiment, European LNG prices extended gains, offering premium to Asia. The landing price for LNG delivered ex-ship climbed to 39.7 euros per megawatt hour, the highest price since December 1st. So, analysts expect that Europe will see more US cargoes destined to the Atlantic rather than to Asia in upcoming months. US natural gas futures traded above $2.1 per MMBtu on Friday, making an over 8% increase for the week, supported by a return of warmer temperatures and positive reports of producers. Looking ahead, major US natural gas producers are planning to further reduce production in the latter half of 2024, after prices fell nearly 40% over the past 2 months. So, the market should expect further upward correction. Wheat prices rebounded to 5.4 per bushel, driven by supply concerns, as France faces its worst soft wheat harvest in over 40 years. Relentless rain, insufficient sunshine, and low temperatures have severely impacted yields and crop quality. According to analysts, the 2024-25 wheat production is forecasted to fall to 25.2 million tons, 27% below the 5-year average. Weather extremes across Europe further affected grains, with excessive rain in the northwest and droughts in the east. In response to the catastrophic harvest, French farmers have sought government financial aid. The last similarly low harvest occurred in 1983, underscoring the profound impact on France's cereal industry. Large international tenders from Algeria and Egypt have lent some support to wheat markets last week. Egypt tendered for 3.8 million tons of wheat, set for various delivery periods, with tender closing on August 12th. There is also speculation that Algeria bought between 600,000 to 700,000 tons. However, good US crop conditions and continued US harvest progress offset the gains. Corn futures continue free fall and dropped to below than $4 per bushel in August, the lowest in nearly 4 years, amid an outlook of weak demand and strong supply. The USDA projects that global corn stockpiles for the 2024-25 marketing year will rise by almost 2 million tons, while production estimates have been raised to 1.23 billion tons. This data has contributed to cautious market sentiment as rising supply, sluggish export sales, and increased competition from Brazil exert additional downward pressure on prices. Additionally, concerns about declining farm income in the US intensify fears of oversupply and highlight the challenges posed by weak demand dynamics. Soybean prices have dropped to $10.1 per bushel, marking an almost 4-year low again, driven by abundant supply and relatively low demand. Additionally to the exceptional Brazilian crop, improved weather conditions in the US are also benefiting crop yields. Meanwhile, recent USDA export data shows that sales are below the typical pace, with new crop sales at a 20-year low. Moving to the shipping industry. Containerized freight index continues its downward correction. That started at the beginning of July. Last week, it lost another 2.5%. Despite value decrease, actual departures from Asia remain volatile, with port congestions and weather-related delays causing significant capacity slippage. Overall in the market, there is understanding that the rates will continue decreasing in 2024-2025, mostly due to the fact that current hectic shipment pace from Asia will soften, so current peak rates will inevitably correct downwards. The Baltic Exchange Dry Index stayed almost unchanged week on week. During the week it was gaining points, however dropped again on Friday. It was mostly driven by the loss in Panamax segment, which dropped almost by 2%. Other segments stayed more or less stable. Vessel owners look ahead to September and October for increased dry bulk demand, driven by the North American grain harvest. However, in the meantime, markets lack clear direction. To sum up, market sentiment in the Urea segment has improved amid a weighted Indian tender. Before that, activity in all geographies remains rather subdued. Imbalance in ammonia continues, with tightening supply and climbing prices in the west and long positions in the east. DAP segment remains mostly inactive. OCP was in discussions with Indian government regarding DAP and TSP supply, and market sources indicate that the deal is close to confirmation. Meanwhile, no clarity regarding Indian DAP subsidy appeared last week. European gas price remains on record high level due to continuing geopolitical tensions. Also, increasing attractiveness of European market for the US LNG exporters. Wheat price futures showed mixed results due to extremely bad news for new crop coming from France, and at the same time, very positive news from the US. Corn and soybean continue a downward rally with no positive signs so far. So let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.